Hi everyone, my name is Renan Reynoso, and we're here today to discuss the most efficient corresponding banking model. By a show of hands, who thinks that their financial institution has the most efficient corresponding banking model? Please raise them up. Confidence, like it. So the goal of our paper is not to design or structure the perfect model. Instead, we were here trying to assess and identify the most dominant model today in the market. With that, please allow me to pass it over to my colleague, Audrey.
Thank you. So we understand correspondent banks are influenced by new regulations and policy changes, in addition to trends set forth by industry leaders with a common goal of maintaining a competitive advantage. Our group has worked to identify the most prominent and efficient bank operating model. To achieve this, we first defined the traditional operating model and analyzed each of the functions which are core to providing correspondent bank services. Our paper further unpacks where each of these functions sit within an organization and how it contributes to the overall efficiency, before sharing what we've identified as best market practices. So the traditional model is a byproduct of ensuring that cross-border payments can be facilitated both easily and safely. This can come by way of setting up reciprocal Nostros and Vostros accounts and leveraging secure global messaging networks such as SWIFT. Many of the challenges faced in correspondent banking over the last decade has driven banks towards scale-based cost efficiency and emphasizing compliance efforts. Each of these are considered when looking at the operating models and how to position those functions, which I'll now pass over to Shruti to further unpack.
Thanks, Audrey. So when we're dissecting various components of correspondent banking, we can see how each component is necessary to enabling cross-border payments, foreign exchange, and international trade as a whole. Client-facing teams include relationship managers and product sales have a focus on revenue generation and portfolio management. They're known as our front office, and they're the first line of defense against any related risks. Compliance, onboarding, and legal act as the second line of defense. They may be centralized or localized, however, they're integral to protecting our institutions and the client by conducting AML monitoring, KYC review, and contract negotiations, among other tasks. Product management and innovation are key components as well that drive development and growth and continue to support the bank and the product suite. This function ensures that the bank adapts to market changes and stays competitive in an ever-changing industry landscape. Each of the components work in tandem with each other to form the backbone of correspondent banking. Now, moving on to the methodology of how we conducted our research. The research for our white paper utilized a qualitative methodology with a sample size global in nature, so spanning North America, Europe, and Asia. We conducted 24 anonymized bilateral meetings with senior members across regional, local, and global banks. Each interview, 45 minutes, with open-ended questions that prompted detailed and nuanced insights into the organizational structure of each institution's correspondent bank structure, as well as further revealing their key priorities and their challenges faced. I'll now pass it back to Audrey to discuss her findings.
Absolutely. So the first set of findings that we want to share today are focused on how each of the functions are structured within an organization. So of the two structural types contemplated, nearly 80% of banks gravitated towards vertically integrating each of these functions as opposed to horizontal integration. Now, the 21% of banks that did gravitate towards horizontal integration of these functions were naturally global banks. Now, this was because they prioritize scale, efficiency, and regulation. Now, each of these global banks had most noted commonly that they were shared service centers, which will support global payments across various business lines. And this is in an effort to improve the cost base. Regional banks, however, are primarily vertically integrated because they cited a need for clear business ownership in addition to a focus on the client service proposition. But in addition to looking at the organization of each of these components, we also looked at the costs associated with them.
So each of the 24 banks that we interviewed provided insights on how they viewed the efficiency and costs related to each of the aforementioned functions. Now, as a caveat, the visibility of the costs and efficiencies varies as per the financial institution. In our research, only 21% of banks mentioned that they had a clear view of the fixed and variable costs associated with their corresponding bank structure. Notable takeaways from those banks mentioned that the efficiency and costs related to product and network management was very efficient. These functions are very lean in nature, and they are consistently and effectively monitored to ensure that there is very little cost wastage. Now, naturally, compliance costs are generally higher due to the heightened considerations regarding KYC and AML per region, and also relating to the fines associated with that. In fact, in 2024, over a dozen banks faced AML-related violations or fees related to AML violations. And so this is not only an operational expense, but it's also an expense related to the fees associated with it. Banks tend to have a better safe than sorry approach to compliance and regulations, and so there's really no room for error, and so costs are much higher. Now, understanding the costs and efficiencies provided insights that prompted the interviewees to envision their perspective of where they would imagine costs and efficiencies should be allocated. And so to go into this, I'm going to pass it to my colleague Alvaro to discuss that.
Thank you, Shusti. So let's talk about the future. The way banks manage their operations is ever evolving. Large global banks are using more and more strategic hubs operating 24/7. Trying to adapt their platforms into more modular, flexible structures, trying to increase agility, and their ultimate goal, scalability. How about regionals? Mainly focusing on verticalization of their models and investing in updating their platforms, replacing legacy systems, and adapting processes. By far, for regionals, collaboration across their correspondent banking network is far more important today than ever. Across the board, global, regional, and local banks agree. The future lies on boosting efficiency, ensuring compliance, and delivering better service. Major targets set by G20 are pushing for faster, cheaper, and more transparent payments. The key enabler, technology. Think AI, automation, and data analytics. These tools are vital for the future of correspondent banking. AI and automation streamline complex tasks such as payment processing and AML checks, cutting costs and reducing risks. Better data analytics, especially with new standards such as ISO, provides deeper insights which allows for better client services and, in a nutshell, client engagement. All in all, sustainability of the model. Now, I'll leave up the floor for my colleague Renan to wrap it all up.
Thank you. So all this information can be summarized by a concept that was presented earlier this year on BAFT European Bank Forum, which was a panel by Jean-Francois held with Elena Hargas. And it's the 5 components in which we could review the most efficient corresponding banking model. They're called the 5 Ps: process, policy, platform, product, and people. Product. It's still a client-focused category in which we could still need to add the most value to our customers. Then we move on to platform. How can we be technology advanced and be user-friendly to provide the most platform that we could? And the process, right? The process would be how long does it take when we want to do a compliance review, legal review, and it's still finished at a reasonable time? Policy is just the nature of the business. We're currently operating in multiple regions, so how can we still be efficient and up to date on the market? And lastly, and the most important of the P's, is people. How are we training our people, our employees? How are they up to date in the market? How are we developing their skills to be able to take and manage risk? Ultimately, we would like to invite you and encourage you to download our white paper, since there you might see a deeper analysis and further information. But before we move on to the Q&A, we would like to take this time to thank BAFT for the opportunity, our mentors Yasmin Oskan and Sabri Richer, our sponsor Jean-Francois Massour, our own financial institution for allowing us to represent them. And lastly, all the industry leaders who took the time out of their days to interview with us and respond to our survey. Moving on to Q&A.
Thank you, Brandon and team. So shall we move on to Q&A? Okay, the first question. In what ways can correspondent bank balance the need for cost reduction with the need to maintain high service quality, high service standards across different geographies? So in our white paper, we segregate that by two different types of structure. One is the governance structure, and the other is operating structure. And within that, we look at specifically how a hub and spoke model under the operating structure is what basically some of the regional and the global banks are adopting, and we find that to be a relatively more cost efficient. Whereas on the governance structure themselves, when we're looking at the, let's say, the selection of correspondent bank in the governance process, the engagement of operations in a vertical model, or when there's a network management in the horizontal model, these two particular cases that we have covered in the white paper, that those we found to be relatively more efficient to solve the problem that we just mentioned. So maybe we'll cover one or two more questions, if that's okay. Could correspondent banking be replaced by DLT or blockchain technology? In blockchain is something that you know a lot, right?
For sure. So could traditional correspondent banking. While I think that DLT and blockchain offer, transformative opportunities for traditional correspondent banking, I do believe that it won't fully replace the current model. In our white paper, we actually go over a few of these projects, like Project Nexus, RippleNet, and a few more like Agora. Currently, they're being used to support streamlining interbank operations and reducing redundancies on multiple intermediaries. And I do believe that this technology can help with reconciliation, transparency, and settlement speeds. However, as we all know, the correspondent banking model does include other pieces rather than just cross-border payments. There's compliance, there's legal review, and there's other pieces that require a lot of human oversight, mainly through legal expertise and regulatory expertise. Not to mention the fact that there's not a key standard across the whole globe. So what I would ultimately offer is a hybrid model to automate those pieces while keeping human oversight.
Thank you very much. So I think our time is up, and thank you, team. Thank you, our sponsors and mentors, and thank you, everyone, for supporting us. Our white paper will be available very soon for download. Thank you all.